Welcome to Warren's Money Buffet, the channel where we turn big financial questions into bite-sized, actionable answers. Today's special: should you borrow $50,000 at 2.99% just to invest it? Is this a golden ticket or a financial booby trap? Quick disclaimer: I'm not your personal financial advisor, just your friendly guide serving up facts, math, and a dash of humor. Always do your own research before making money moves. If you love smart money talk, subscribe and smash that like button so you never miss a tip that could put more cash in your pocket. Here's what's on the menu today. We'll break down the $50,000 loan opportunity, crunch the payment math, and explore both conservative and aggressive investment paths. We'll compare strategies, spotlight the real risks, and help you figure out if this loan is your ticket to wealth or stress. Plus, you'll get pro tips, real Reddit stories, tax insights, and a step-by-step decision framework. Stick around for my final recommendations and some action steps if you're feeling bold. Ready? Let's dig in. Imagine you could borrow $50,000 at just 2.99% interest. Tempting, right? This exclusive military loan could be your secret weapon for investing. But before you charge into battle, you need to know the rules of engagement. Should you play it safe, go for big gains, or steer clear altogether? Let's see what this opportunity is really made of. A $50,000 career starter loan for military members, fixed at 2.99% over 5 years. Low monthly payments, predictable costs, and a unique financial edge. You can take the conservative route for steady returns, get aggressive for bigger gains, or run away if your financial armor isn't strong enough. Choose wisely. Your future self will thank you. Let's talk numbers. With this loan, you'll pay $898.21 a month for 5 years. Total interest? $3,892.74. Total repayment? $53,892.74. Remember, you owe this money no matter what happens in the market. So, can your investments outrun the cost? Let's find out. If you like to sleep at night, the conservative path is for you. High-yield savings accounts like Vero and Fitness Bank offer 5% APY, FDIC insured, so your money's safe. 6-month Treasury bills yield about 4.8% and are backed by Uncle Sam. CDs from First Internet Bank lock in around 4.5%. Slow and steady might just win this race. Let's crunch the numbers. Earn 5% on $50,000, generating $2,500 a year. Pay 2.99% interest, about $1,495 a year. After taxes, you're left with roughly $764 profit annually. That's about $64 a month, or $2 a day, which is enough for a fancy coffee, but is it really worth the effort? You decide. Feeling bold? Top stocks like Vigil Neuroscience soared over 300% this year, and CoreWeave wasn't far behind. Growth ETFs like Vanguard's S&P 500 VO averaged 9%, and tech giants like Nvidia and Apple can supercharge your returns. Best case? You could double your money. Worst case? The market tanks and you're left with losses and a loan to pay back. Want to get creative? Data centers are booming with AI, offering 10 to 15% yields. Real estate, gold, and even private equity can spice up your portfolio. But remember, higher returns often come with higher risks and less liquidity. Don't invest in anything you don't fully understand. Let's compare. Conservative strategy, about $1,500 profit over 5 years, low risk. Aggressive approach, up to $23,000 profit, but with roller coaster volatility. Alternative options, similar gains, but more complexity. Pick your path based on your risk appetite and financial goals. Here's where the rubber meets the road. Market drops can erase years of gains. Real estate and alternatives can be hard to sell fast. Taxes can eat your profits, and let's not forget, 37% of borrowers end up impulse spending. If you panic easily, this loan might not be for you. This loan is for you if you have stable income, a solid emergency fund, and no high-interest debt. You're cool with seeing your investments dip 20% and not losing sleep. But if you're living paycheck to paycheck, have credit card debt, or would panic in a downturn, run. Don't walk away. Here are some pro moves. Ladder your CDs so you always have cash for payments. Split your investment between safe and aggressive assets for balance. Keep 6 months of loan payments in reserve as a buffer. And if you have high-interest debt, pay that off first. It's the best guaranteed return you'll ever get. Don't just take my word for it. Redditors have tried this. One military user put $50,000 into T-bills and made $800 a year after taxes. Not life-changing, but hey, it paid for a vacation. Real stories, real lessons. Don't forget Uncle Sam. At a 24% tax rate, your investment profits shrink fast. Always factor in taxes when calculating your real returns. Otherwise, you might be in for a surprise come April. Ready to decide? Check your debt and emergency fund, verify your income stability, and set realistic profit goals. Assess your risk tolerance. Can you handle a loss without panicking? If you're not sure, maybe sit this one out. Bottom line, only consider this loan if you're investing conservatively and your finances are rock solid. For most people, the small profit isn't worth the stress. But if you're disciplined and prepared, it could be a smart play. Just don't expect to get rich quick. If you're ready to go for it, calculate your true numbers, set up safeguards like automatic payments, and pick your investments before you borrow. Monitor your progress monthly and have an exit plan. And always use trusted resources to guide your decisions. Want more military money hacks and wealth-building tips? Watch my next video for strategies you can use right now. Don't forget to subscribe, smash that like button, and join the Warren's Money Buffet community for weekly insights. Let's build wealth together, one smart move at a time. Thanks for watching. Remember, smart investing starts with smart questions. And if you are serving this great country, we thank you for your service. See you in the next video.